Hello traders, Gary Wagner here just after 10 o'clock in Honolulu, 4 o'clock in New York on Wednesday, the 30th day of October, 2013, and this is the daily report for gold and silver. Fairly wild gyrations in the precious metals markets as they react to statements released by the FOMC, or I should say the absence of news is what's been moving this market in the most recent FOMC meeting, but we'll talk about that during the show. Currently, we're in essence back to unchanged on the day, 1344, and we've had a low though of 1334.20 and a high of 1360.80. You can see this on this Japanese average, our high 1360, our low here. But I draw your attention to the color of this candle, because we've had a substantial rally, and during this rally, even though the body sizes have begun to really compress a little bit, we had the absence of tails, decent body size up until yesterday's daily candle, and we talked about the fact that we could be looking at a pivotal candle, but if we look at today's, it has now gone red, and that's something we definitely want to cover all on today's daily report. Now, silver, however, is showing some pretty nice resilience in the marketplace. That is currently trading up about 23 cents higher, 22.73, 22.83. That's your bid-ask spread. 22.39 on the low, 23.20 on the high. We talked about the fact yesterday that I felt that the downside that we had seen in silver was fairly overdone. And it does appear as though they are trying to move that market higher. Traders, I want to start today's show by revisiting the daily chart that we pulled up at the beginning just to talk about price quotes. Very interesting candle that's forming in terms of the Japanese average. You've got this tremendous range, but it is a second doji day. But at the same time, we have 1335 as being a fairly important number. That is a fib retracement, and as I compress the chart, you will see where that fib retracement is coming from. But most importantly, I think what we will see as we compress this chart is how these numbers are really all kind of coming together. Let's go ahead and compress it, and you'll have a sense for what I'm saying. Really, all I've done on this particular chart is I've added one fib retracement. I started from this particular point of the rally because you had such an aggressive top. This is the market at 1155, and I put it up to the record top. But lo and behold, I found something that I thought was kind of interesting, and that is when I looked at the 100% or zero line where it begins, 1155, and I looked at where this most recent low of 1181 formed, I realized that it was close, but not really on the numbers, which is why we haven't really brought that up. But when I look at the support here, then I look at resistance right in here, which is 1447, and remember the high 1435. We see that it couldn't take that out, but effectively it is now trading above this 76% retracement, which is the first mark. The 61% retracement accounts for the current resistance. Once we add our upper level slope line or resistance line in there, it becomes a little bit clearer to us. And what we see when we do that is that there is absolutely a reason to be looking for resistance right in this area. And it's based historically on what we saw happen last time. Now, in terms of support, we can kind of see where this low comes in, but where does this particular low, this 1250, where does that stem from? And to do that, all we have to do is look at historical references in the market. So the easiest way to do that, obviously, I'm going to create a horizontal line. And what I'm going to do is kind of just make the horizontal line from these lows. And lo and behold, it actually does match an area. Where does it match? Well, it matches this particular top here, because there's no doubt when we look at historically how this market ran up, this is the market running up from $1,000. It hits this high of about $12.50. This is the conclusion of a major wave right in here. We get a retracement. It comes down and finds support, 1155. That's where I've got this secondary fib retracement, or the first fib retracement coming from. But once we put those numbers in, this number becomes a little bit clearer to me. In other words, it makes sense on a technical basis where this low comes in from, because we are getting a match here. No doubt it was resistance. It comes back down, then flies through there. We really never see this area affected again in terms of a technical basis taking a look at it, because realize that prior to this, the market was coming up from below 1,000. So this is the first time you could really see an effective 1250, any kind of historical reference. But there's no doubt, when we look at this particular top right here, we compare it to this most recent low at 1250, we do have a really strong historical reference. So it was important to me to look at the longer term historical data, so that as we start looking at our shorter term charts today, these areas make sense to us, and we can see that dynamically there's technical evidence and prior history that supports the basic assumptions that we're working with. Now, I draw our attention once again to the elephant in the room. And the elephant in the room for any kind of a gold bull has been the fact that when we look at this slope, this upper level resistance line, we know what the market did when it hit 1435. We know what the market did each time this market came up to test this resistance level. We know what came out of it, and what came out of it were dramatically lower prices. Now, in terms of the lows itself, I have brought in where this particular low at 1250 comes from, and that's what was really important to me, because it didn't really come up in a Fibonacci number. And so without it having some real historical teeth to it, so to speak, it's not an area that I look at with any kind of a real game plan, because I have no idea of how it reacted last time it was in that area. But with this support level in place, and with our upper level resistance that we have seen, at least for the last couple of times, not being able to be taken out, when we then look at our support level, what that tells me is that we're continuing on this compression triangle. It wouldn't surprise me to see downward pressure to the bottom of the support line, upward pressure, downward pressure, and at some point a breakout. Now, as a gold bull, I'm looking for a breakout to the upside. However, that's not what we've been seeing. Even with the fundamental factors of what the Fed is doing in terms of their monetary policy, and it making sense that this should be supportive of gold, we've seen them really tear that price down. And so we're still caught within, in my opinion, this compression triangle, and more importantly, the fact that we really couldn't take this particular move to the upside. We couldn't get this continuation of this rally, lends me towards the side of further downside pressure. Now, in terms of upper level resistance, and should this market find support, because realize now it's in essence trading unchanged on the day, what would we want to look for? What would we want to see? And for that, we've really got to go back to our fib retracement points. 1340, 1362, those are our key numbers, key numbers to look at. Realize that we got the breakout from this shorter term move down, and of course that's coming right after we saw the failure to complete and to take out that 1435 here. Market comes down. We've talked about where this support makes some logical sense in terms of where that 1250 comes in, but our longer term sloped lines really are giving us an indication that we're real top heavy in this area. And so the way I would look for this marketplace in terms of price point, if it does fall, is to basically what we need to do is a fib retracement that covers this last rally here. And let's go ahead and do that. There we go. And really all I've done is I've pulled up a shorter term chart. This is a 240-minute chart. We have our short-term resistance that we broke out and broke above. That's quite evident. And now we've added one fib retracement, which basically accounts for 1251 to 1362, our low and high of this most recent rally. Lo and behold, 23% takes us to 1336. Draw it across, we can see lows in here that have touched to but have not broken below there. Next line is going to be 1319. When we look at that historically, we see that there was a resistive point here, and if we want to follow it back, of course, we'd simply put in a horizontal line. Then we've got 1306, that's where that number comes in from, and 1300, of course, is a pretty critical area, and then 1293. So these are the various levels. If the market finds itself under pressure, my sense is that a 50% retracement, of course, would take us back to about 1300. That's right in here. And that would be a logical point in terms of where I think this market could fall. Of course, if it does continue lower, the areas that we want to look at for critical support right now being broken has got to be about 1335. And it's based on a couple of factors. But as you can see on this one, it is a 23% retracement of this most recent rally. Now, in terms of an update for our most recent trades, in terms of the gold trade, I believe that most traders got out in the high 50s, 1350 to 1358 is where I have had emails come back from subscribers letting me know that they got out. For those that haven't, you have trailed your stop up at this point, but I really believe that yesterday, when I gave a secondary recommendation and told people that had stops at 1330 to go ahead and take those to the market, they're out at roughly 45. So I'm going to average that and probably mark this trade out, the gold trade out at about 1350. Silver, however, we are still in the trade. We are roughly where we entered the market. And as I said, when I talked about gold and I raised the stop for gold, I really didn't think that we were going to get the same kind of pressure in silver, and this is why. Looking at our daily chart and looking at these recent lows that we've had, and also the way that the market's been trading, as opposed to when we look at our daily gold chart. Our daily gold chart had been sideways, but had been dramatically rising up, even at a less slope than that, but it had been moving up. At the same time that gold was moving up, silver was really moving sideways. And when we looked at the way that it was moving sideways, we noticed that we had a number of lows that came into the area of about 2225, but they seemed to hold. We had resistance that we identified at about 2280 that has come in because the market really stalled there. We do have today's activity where we've had this large spike, and so my sense is that what we might be witnessing here is something like we had a price spike, consolidation, and I would look for another move higher. At least that's what I'm anticipating right now. Now, I am expecting to see gold go under pressure, and that could really drag silver with it. The line in the sand, so to speak, at the point in which I would acknowledge that would be a break below 22.25. This has been Gary Wagner, wishing you as always good trading. Talk to you tomorrow for another daily update review. Bye-bye.